look out my window.
Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Thursday, the 10th of June, and this is the Daily Report. Gold has been trading under significant pressure today. It did hit a intraday low of 1215, currently trading at 1223.13. Of course, we did enter a long position yesterday, and that was a quick and brutal stop in at around 1232, 1232, and out at 1220 one day. Now, I've got a couple of things that I'm looking at in the market today. I still believe that what we're witnessing is simply profit taking. When we look at the big picture, meaning this uptrend that we have seen, we still must maintain that it is in fact fully intact. If I draw this channel here, you'll see, and of course I'm going to be basing it on these series of lows here. Here, of course, we broke below it, and then again here. So I am looking for the potential for more downside. However, I am not convinced that this market's run is over just yet. As you can see, as I'm doing this report, the market seems to be pulling a significant rally again. The other thing that I've noted that I do like about this market, and what is telling me that we're still in a defined uptrend, when I look at these series of lows, starting with our first low back in February, a higher low, and a higher low. We've had a succession of higher lows. That's the most true indication that a market is still in a defined uptrend. The fact that it is trading in such a way, in other words, it moves up, it retraces, it moves up, it corrects, it moves up, it corrects, that doesn't surprise me. The volatility that we see and the sheer magnitude of the moves is something that I have not witnessed in gold, but it is something that we certainly need to get used to. The other indication that I have that we are still in a defined uptrend is when I draw my very, very short trend lines. The first one is going to go from these two lows here and here, and if you notice, the secondary, this low currently is above that. So we are still making a succession of higher lows. A very interesting article that I came across today, and this is from our Chinese newspapers. This is the English version of the People's Daily Online. The headline is, "Capital Flow into Gold Markets May Trigger Economic Bubble." And it says that since property regulation policies were launched and more real estate speculators became interested in gold, that resulted in the question of whether this would lead to another economic bubble when large amounts of floating capital in the real estate markets are transferred to the gold markets. Experts say that in order to curb the damage to the real economy, some effective measures must be taken to guide the floating capital. Now, according to the latest announcement by the Shanghai Gold Exchange, the gold trading volume in China in May was more than 662,000 kilograms. Now, that's an increase of 18% from the previous month, or about 141% higher from the previous year. The trade turnover reached 175 billion Chinese yuan, an increase of almost 24% from the previous month, or about 213% from the previous year. Now, traders, I've gone ahead and put up my Bollinger Bands. As you can see, we did get a sell near the top of this one top Bollinger Band, and our low seemed to form right at the middle band, right in here. I am still bullish. Overall, long term, absolutely. I believe the fundamentals are still intact. The question is, when is it safe to enter the water again? Traders, I still believe that this market has the potential to reach our target of 1265, maybe even higher. As I said, the question is, when is it going to be safe to re-enter the market? When we look at our trade performance overall, we have been doing quite well. We can expect to be stopped out now and then. The only way I can control risk is with stops, and sometimes they simply don't hold. In this particular case, as I said, I still believe that the market is still firmly in this upward trend. I see these corrections as expected. However, I didn't think the market would come down as far as it did, as quickly as it did. Traders, I think to give you a real indication of the types of moves that we have witnessed in the market, we are currently looking at a 1-hour candlestick chart of U.S. gold. If you look back starting at around June 4th, roughly 6 days ago, we were trading below $1,200. We saw a move in 1, 2, 3 days till the 7th that took it to the highs, and then this slow meandering market as it came down. Traders, we're now looking at a 4-hour candlestick chart. And the one thing that I think is worth noting is the series of dojis that we have gotten at these tops and bottoms, and also the consolidation areas right before these breakouts, this long breakout, and also up here, this double doji. What I am finding interesting right now is the current candle that we received, which took us to 1215, is absolutely hammer-like, and it is a long-legged doji. That has been an indication in the past that, in fact, the market has found a tentative bottom. Let me change this back into a daily chart. As you can see, when we look at our daily chart and we look for either long-legged dojis, hammers, or inverted hammers, we tend to find them at these bottoms and also at the points of breakouts. This major low, which was the very, very lowest that we got on that final corrective wave C, was at 1045. You see the small inverted hammer, another doji, a doji, and yet another almost hammer-like candle. My question is, when we see confirmation that this market has bottomed, I think, in fact, if we can hold 1215, and I do believe that we probably will, as our low here, I think that we'll go into our next move up. Again, it is my belief that we are still in an uptrend. We have not in any way, on a technical basis, broken that uptrend. On a fundamental basis, nothing has changed in the marketplace. And because of those two factors, I am looking for a place to re-enter the market. We need to see how it trades today. I want to see if there's going to be further selling in the market, or, in fact, has it formed a base and has it found this bottom at 1215. If I do see an indication that we do need to enter the market, I will send out a special email-only announcement today. And I will tell you this, traders, we are going to have to trade with more risk than we have traded in the past. In other words, stops need to be loose enough that they simply cover this absolute volatility that we have in the market. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. Wishing you, as always, good trading. Bye-bye. We'll talk to you on Friday for the weekend review.
When I look out my window, many sights to see.